Ever wondered how the rich get richer? It's not always about picking individual stocks. Many millionaires and billionaires leverage a powerful tool called ETFs. But what exactly are ETFs, and how can you, the regular person, use them to make money? Buckle up, because in this video we're cracking the code on ETFs and showing you exactly how to put them to work for your financial future. Understanding ETFs. You might have heard the term ETF thrown around, but what exactly are they? Think of ETFs as your ticket to a diversified investment portfolio, without the complexity of managing individual stocks. These funds allow you to invest in a basket of assets, whether it's stocks, bonds, or even commodities, all through a single investment vehicle. In simpler terms, ETFs are like buying shares in a basket of companies rather than just one. This diversification helps spread out your risk while giving you exposure to various sectors of the market. How ETFs work. Now that you know what ETFs are, let's dig deeper into how they operate. Unlike traditional mutual funds, ETFs are traded on exchanges, just like stocks. This means you can buy and sell them throughout the trading day at market prices. But here's where it gets interesting. ETFs offer unique features such as intraday trading and options, making them incredibly versatile tools for investors. When you invest in an ETF, you're essentially buying shares of a portfolio that tracks a particular index, sector, or asset class. These portfolios are managed by professionals who aim to replicate the performance of the underlying assets. This replication can be achieved through various strategies, including full replication or sampling. Additionally, ETFs offer transparency and liquidity. You can easily see what assets the ETF holds and trade your shares whenever the market is open. Plus, ETFs often have lower expense ratios compared to mutual funds, making them cost-effective options for investors looking to diversify their portfolios. Getting started with ETFs. Ready to dip your toes into the world of ETF investing? Here's a step-by-step guide to get you started. Number 1. Open a brokerage account. The first step is to open a brokerage account with a reputable online broker that offers access to a wide range of ETFs. Look for brokers that offer commission-free ETF trades to minimize your trading costs. Number 2. Research ETFs. Once your account is set up, it's time to research ETFs that align with your investment goals and risk tolerance. Utilize resources such as financial websites, ETF screeners, and analyst reports to identify suitable ETFs for your portfolio. Number 3. Diversify your portfolio. Diversification is key to managing risk in your investment portfolio. Consider investing in a mix of ETFs that cover different asset classes, sectors, and geographical regions to spread out your risk and maximize potential returns. Number 4. Start small and invest consistently. Don't feel pressured to invest a large sum of money all at once. Instead, start small and gradually build your ETF portfolio over time. Consider implementing a dollar-cost averaging strategy, where you invest a fixed amount of money at regular intervals to mitigate the impact of market volatility. Number 5. Monitor and rebalance your portfolio. Once you've invested in ETFs, it's important to monitor your portfolio regularly and rebalance it as needed. Rebalancing involves adjusting your portfolio's asset allocation to maintain your desired risk-return profile. Making money with ETFs. All right, now for the million-dollar question. How do you actually make money with ETFs? There are two primary ways: capital appreciation and dividend payments. Let's take a closer look at both of them individually. Number 1. Capital appreciation. Capital appreciation is one of the primary ways investors make money with ETFs. This occurs when the value of the ETF itself increases over time. As the underlying companies or assets within the ETF perform well, the price of the ETF rises accordingly. When you sell your ETF shares at a higher price than you bought them, you pocket the difference as profit. It's like watching your investment grow over time as the companies within the ETF thrive and generate returns for their shareholders. Capital appreciation can be a powerful wealth-building tool, especially when investing for the long term. Number 2. Dividend payments. Another way to make money with ETFs is through dividend payments. Many ETFs hold stocks that pay dividends, which are portions of a company's profits distributed to shareholders. When you own an ETF that holds dividend-paying stocks, you receive a share of those dividends. It's like getting a little bonus just for holding onto your investment. While not all ETFs pay dividends, some can be excellent sources of passive income, especially those focused on established dividend-paying companies. Dividend payments can provide a steady stream of income on top of any capital gains. From the ETF's price appreciation, making them an attractive option for income-oriented investors. Choosing the right ETF. With thousands of ETFs to choose from, picking the right one can seem daunting. But fear not, there are a few key factors to consider when selecting an ETF that aligns with your investment strategy. Number 1, investment objective. Start by defining your investment objective. Are you looking to grow your wealth over the long term? Generate income or hedge against market volatility? Different ETFs cater to different goals, so it's essential to align your investment strategy with your financial objectives. Number 2, risk tolerance. Assess your risk tolerance before choosing an ETF. Are you comfortable with the potential for volatility, or do you prefer a more conservative approach? Some ETFs are riskier than others, so it's crucial to select one that matches your risk tolerance level. Number 3, expense ratio. Pay attention to the expense ratio of the ETF. This is the annual fee charged by the ETF provider to cover management costs. Lower expense ratios mean you keep more of your investment returns, so it's wise to opt for ETFs with competitive expense ratios. Number 4, liquidity. Consider the liquidity of the ETF before investing. Highly traded ETFs typically have higher liquidity, meaning you can easily buy and sell shares without significantly impacting the market price. On the other hand, less liquid ETFs may have wider bid-ask spreads and higher trading costs. Number 5, performance history. Evaluate the historical performance of the ETF to gauge its track record. While past performance is not indicative of future results, it can provide valuable insights into how the ETF has performed under various market conditions. 4 things to know about trading ETFs. Now let's take a look at 4 things you should know before trading ETF. Number 1, understanding order types. Differentiate between market orders and limit orders. Market orders execute immediately at the prevailing market price, providing convenience but carrying higher risk during volatility. On the other hand, limit orders allow you to specify the price at which you want to buy or sell an ETF, granting more control over your trades and potentially minimizing losses. Number 2, embracing diversification. Embrace the power of diversification by spreading your investments across multiple ETFs, representing various sectors, industries, or asset classes. Diversification helps reduce risk by ensuring that a downturn in one sector doesn't significantly impact your overall portfolio. It's like having a safety net for your investments. Number 3, being mindful of fees and commissions. Pay close attention to fees and commissions associated with ETF trading. While some ETFs offer commission-free trading, others may have management fees or transaction costs that can eat into your returns over time. Make sure to factor these expenses into your investment strategy and opt for low-cost options whenever possible to maximize your returns. Number 4, staying informed about market trends. Stay proactive and informed about market trends and developments that could impact the performance of your ETFs. Keep an eye on economic indicators, company earnings reports, and geopolitical events. By staying abreast of these factors, you'll be better equipped to make informed investment decisions and capitalize on opportunities in the market. Remember, knowledge is power in the world of ETF trading. Exchange-traded funds offer a convenient and accessible way for investors to grow their wealth in the stock market. Whether you're a seasoned trader or a novice investor, ETFs provide the flexibility, diversification, and potential for profit that can help you achieve your financial goals. So why wait? Start exploring the world of ETFs today and unlock the power of passive income and long-term wealth accumulation. If you found this video informative, then don't forget to hit that like button and subscribe to our channel for more amazing content. Thanks for watching, and until next time, happy investing!